Welcome back to Crypto Macro Insights. I'm Maya, and it's Monday, September 1st, 2025. Tom, just 72 hours ago we talked about the ultimate inflection point approaching with the reverse repo collapse and employment data. Now we're literally at the doorstep of what could be the most critical week in Bitcoin's history. The reverse repo facility has dropped another 50% to just $77.9 billion. The liquidity injection is accelerating. Are we witnessing the final convergence of everything we've been tracking?
Maya, this is it. We've reached the crescendo of the most extraordinary monetary experiment in modern history, meeting absolute retail capitulation. That reverse repo drop to $77.9 billion represents another massive liquidity injection in just 3 days. We're now looking at nearly $250 billion that has been released into the system in the past 6 months. But what's even more remarkable is the psychological state. Retail isn't just frustrated anymore. They're expressing genuine despair. Meanwhile, the VIX sits at 14.43 and institutions are completely calm. This setup is beyond unprecedented.
Let's dive deep into that retail psychology you mentioned. I'm seeing posts that have moved from the usual complaining to genuine despair, people talking about their pets dying and connecting that to Bitcoin not performing, others expressing actual suicidal thoughts over missed opportunities. There's complete rotation into other assets like gold mining stocks, essentially giving up on crypto entirely. Is this the final stage of capitulation we've been waiting for?
Maya, this is textbook final stage capitulation. When retail investors are expressing genuine thoughts of self-harm over financial positions, while simultaneously the macro backdrop provides the most supportive environment in Bitcoin's 16-year history, you have the perfect contrarian setup. What's particularly telling is the PYTH phenomenon. Retail is chasing momentum in smaller Oracle tokens, while completely ignoring that Chainlink just announced a partnership with the U.S. Department of Commerce. This disconnect between fundamentals and emotional decision-making is exactly what creates the most explosive opportunities in financial markets.
The numbers are staggering when you look at the complete picture. You mentioned the reverse repos at $77.9 billion, but let's talk about the broader macro constellation. The yield curve steepening has accelerated dramatically. The 10-year minus 2-year spread is now at 0.64%, up 220% in just 6 months. The VIX has compressed further to 14.43. How do you read this combination?
This is the most bullish macro convergence I've ever witnessed, Maya. That yield curve steepening acceleration tells us bond markets are pricing in significant economic expansion, not recession fears. The VIX compression to 14.43 means institutional money isn't hedging for downside risk. They're positioned for upside. And here's the kicker. Bitcoin has not only held, but maintained remarkable stability at 112K despite this unprecedented retail psychological breakdown. That's institutional accumulation in real time. The federal funds rate remaining stable at 4.33% gives the Fed perfect flexibility for September policy adjustments.
Let's talk about the next 72 hours. We have the ADP National Employment Report on Thursday, September 4th, followed by the Employment Situation Report on Friday, September 5th. You've been calling these the make-or-break dates for this entire thesis. With everything we've discussed, the accelerating liquidity flood, the absolute retail capitulation, the institutional positioning, how are you thinking about these dates now?
Maya, I'm upgrading my conviction from Friday's 55% to 60% on the bull case. Here's the key insight that's changed. The employment data doesn't need to be catastrophically weak anymore. With retail psychology this completely broken and $250 billion in liquidity ready to deploy, even marginally disappointing numbers could trigger massive institutional flows. The Fed has been desperately looking for any excuse to maintain or increase accommodation, and disappointing jobs data gives them perfect political cover. What's more telling is Bitcoin's price action. Holding 112K despite maximum psychological pressure suggests the smart money accumulation we predicted is intensifying ahead of these dates.
Tom, as we head into what could be the most significant 72 hours in Bitcoin's recent history, if you had to give our listeners one final insight combining this unprecedented liquidity accommodation, the complete retail breakdown, the institutional accumulation patterns, and the approaching catalyst, what would be your key message?
Maya, we are witnessing the convergence of multiple once-in-a-generation events within a 72-hour window. Nearly $250 billion in liquidity has flooded the system through reverse repo collapse. Retail psychology has reached genuine despair, while institutions remain completely positioned for upside. The yield curve steepening acceleration tells us smart money expects significant economic expansion. And in just 72 hours, we get employment data that could provide the Federal Reserve perfect justification for aggressive accommodation. If the stars align, weak jobs data and Bitcoin breaking 115K, we could witness the most asymmetric trade opportunity in cryptocurrency history. But the window is narrow and closing fast. This setup has been building for months, and it will resolve definitively within the next week. The opportunity cost of not being positioned appropriately is potentially enormous.
Powerful final thoughts as always, Tom. To summarize for our listeners, we stand at an unprecedented convergence point where $250 billion in liquidity accommodation meets absolute retail capitulation. The reverse repo facility has collapsed to just $77.9 billion, accelerating the most aggressive liquidity injection in modern monetary history. Retail psychology has reached genuine despair levels, while institutions remain positioned for upside with the VIX at 14.43. The yield curve steepening to 0.64%, up 220% in 6 months, signals growth expectations, not recession. Bitcoin's stability at 112K despite maximum psychological pressure confirms smart money accumulation ahead of the critical employment data. Thursday's ADP report and Friday's employment situation could trigger the most asymmetric opportunity in crypto history. Remember, extreme setups require extreme discipline. Position sizes of 3 to 5% maximum, stop losses at 108K, and emotional discipline will be crucial. We'll be back tomorrow to analyze the final pre-employment data positioning. Until then, stay disciplined, stay positioned appropriately, and keep your eyes on September 4th and 5th. The convergence is here.